Hi there, you're watching Market Cafe on ET now with me Shreyansi Singh and with me is Priyanka Uppal, and over the next 1 hour we'll get you news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Priyanka, good morning. Let's take a look at the US markets then.
A very warm morning, Shreyansi. Now we're starting a new month. We've already started a new expiry. September month was really a fantastic month, though we reversed some gains by the end of the day, talking about Indian context. But for US, it was clearly a winning month. In fact, yesterday what happened, which happened to be the last day of September month for them, S&P and Dow, they both ended the session on records high. Key speech had to come in from Powell. As Powell spoke, Dow of course fell by 150 points. Nasdaq and S&P both came down, but then still they had the record closing in the regular session. Now, what happened actually yesterday? Powell indicated that further there could be rate cuts. There could be 25 BPS rate cut. That means a quarter percentage point, 50 BPS in total, 2 rate cuts, 25 BPS each. Now, but then he also spoke about a little hawkish statement, we should say. He also spoke about that the interest rate cannot be the aggressive rate cut, which just recently happened, should not be interpreted as a sign that the future moves also would be aggressive. But then, yes, there's some key data which our producer is getting in. Let's just address that first. So indices closed, you're talking about the entire month. The indices closed Q3 on a positive note. It was not just the month, it was a quarter close also. Our winning month, S&P saw one of the best trading month also ever since after 2019. S&P, Dow and Nasdaq both closed September on a winning note. Now this is on the move of the kind of movement that we saw, and this is, however, when Powell started to speak, market did fell a little. Now what about US futures? US futures, if you talk about, let's just get you more cues now. Now, what did the key trigger? There are a lot of economic data which is coming in. On Friday also data is coming in, and that could be a watchful gauge for the Fed also to understand and to decide on the way forward. But what exactly happens? Powell indicated clearly there would be rate cuts coming in. 50 BPS points, round about 25 BPS, two rate cuts of a quarter percentage point each. But then he also mentioned that the aggressive rate cut, which just recently happened in September meeting, should not be interpreted as a sign that the future moves could also be aggressive. So that means as the economy improves, as anticipated, if the economy improves, then only they will make such rate cuts. He said that we are not on any preset course, he told, while he was addressing at the National Association of Business Economy. However, he did express his confidence in economic strength, and he also sees inflation continuing to cool off. So overall, it was a good session from US markets. But then yes, traders were a little disappointed. Maybe that would there be aggressive rate cuts or not, or the rate cut would be dependent upon the economy performance. That's what the cues we have from US markets, Shreyansi.
Well, absolutely, and there's a lot to look at when it comes to oil prices as well. Let's take a quick look at what oil was doing, both in terms of a daily basis as well as a monthly basis. When you take a look at a daily basis, of course, you're looking at a steady move coming in, just about a cent of a move coming in for WTI as well. And this is as a prospect of additional supply entering the market amid lackluster global demand growth, offset concerns that the escalating Middle East conflict could also disrupt exports in the key producing region as well. So when you take a look at the move coming in on the monthly basis, that's the important one to watch out for, because when you take a look at Brent futures, you're looking at a downtick of about 9%. Now it's third month of declines and the largest monthly drop coming in since November 2022. Now it slumped 17% in the third quarter as well for its biggest quarterly loss in a year. When you take a look at WTI as well, you can also take a look at the 7% loss coming in terms of a monthly basis. On your screens, you can see that as well. And then also a drop coming in, 16% drop coming in for the quarter. When you take a look at WTI now, what really is happening with the oil market is that there's a couple of factors that the market is keeping a very close eye on. Now, of course, the Israeli military began limited, localized and targeted raids against Hezbollah targets in the border area of southern Lebanon. And that is according to a statement that they've given earlier. And this is something that the market is keeping a very close eye on, because it's those tensions that have really kept the market on its toes. Now, still major producers are also set to increase their output before the end of the year. OPEC Plus and what they plan to do in December and what they're really penciling in is also in focus, because OPEC Plus, which also groups OPEC members and allies such as Russia, is also scheduled to raise output by 180,000 barrels per day in December as well. Lastly, if you take a look at US crude oil and fuel stockpiles, that were expected to have fallen last week by about 2.1 million barrels in the week to September 27th, and that's also something that we're keeping a very close eye on. Lastly, let's also take a look at gold then, because gold has risen 13% so far this quarter. Took a breather after that historic rally driven by US monetary easing and heightened Middle East tensions, and that of course put it on course for its best quarter since 2020. That is something that we're looking at when it comes to gold, and it's that bumper rate cut that really put gold in the spotlight, Priyanka.
Yeah, all right. So oil and gold, of course, they have their own move and what the kind of indicators we're gathering in. Let's also gather in, and in fact, we've just addressed it, but let's put it in a more perspective way for our viewers. What were the key commentary that came in from the Fed chair? Now, Jerome Powell, as he indicated that the US Central Bank will not be as aggressive in easing. In fact, he did indicate that the quantum of the next rate cut will most likely be smaller. Additionally, he also said that depending on the health of the economy, policy over the time will move over to a more neutral stance. But there is no preset course. In fact, while he spoke, we saw that equities fell and treasury yields they came up. Now, the bond yield are nearly 3.8%. So that's a kind of move that we must track in, because it's a key indicator which comes in from the central bank's action.
Well, absolutely. That is something that we're keeping a very close eye on. Let's also get going with some other commentary, keeping it with key commentary, but shifting focus to China then as part of 75th anniversary celebrations for the People's Republic of China. In his speech, Chinese President Xi Jinping said that they see no challenges faltering the country's growth. He also reiterated Beijing's firm opposition to Taiwan's separatist activities while calling for both sides to increase economic and cultural cooperation.
Okay, now shifting focus to Japan now. The Bank of Japan and the Tankan report, which shows that firms expect inflation to be at 2.4% a year from now. Further, it's expected that the consumer prices will witness a rise of 2.3% 3 years from now and 2.2% over 5 years. Remember, the survey will be among key factors that the central bank will scrutinize in setting monetary policy and even releasing the fresh growth and inflation forecast at its next meeting, which is slated on October 30th and 31st.
All right, well, tell you what, as a reminder for our viewers, South Korea, Hong Kong and mainland Chinese markets are shut on account of a public holiday, but what unfolded in the previous session? Chinese stocks scaled the fastest rally since 2008. Shanghai surges a whopping 8% as well, and with a big stimulus push, will the Chinese economy then pick up momentum? And while it does, what does that spell for India as well? Let's listen in to the view coming in from Geoff Dennis, who's an emerging markets commentator.
I think obviously things are going to be different across different countries, but I think the most important difference between the US banking system and other banking systems across the emerging markets are that you have a much greater concentration of emerging market banking into, generally anyway, into a number of small and therefore well-capitalized banks. So bear in mind that this began, albeit Silicon Valley Bank is a big bank, it's still a regional bank. And of course, you've had the fallout with First Republic and worries about other banks. The Signature Bank is a small bank. But if you look at India, you look at Brazil, you look at a lot of other countries across EM, you've got a much, much more concentrated banking system. And therefore, I think that necessarily means the risk of small banks causing problems is much lower. Generally, however, I would say I think regulations on banks are pretty good across most emerging markets, not across the board, but still across most markets. I think what's fascinating here is, as we've seen these three banking episodes, SVB, Signature, and Credit Suisse, happening, I believe, for essentially different reasons, albeit within the rising interest rate environment that we're getting, we've seen across the world, especially in the US. You've seen no talk whatsoever of problems in emerging markets. And I think that's primarily, as I say, got to do with the concentration of emerging market banks in banking systems into much bigger banks. And I think that cannot be ruled out. And I think in some sense, this has been a really pretty good period for EM in terms of that particular factor.
All right, that's what ailing China's economy, and the kind of movement we have seen in Chinese ETFs is of course commendable. It's more than 15% of return in a week. We'll stay for a short break here. More to come on the other side of the break. We'll get you the action from the Asian market and of course what cues to track from Indian markets today.
Welcome back. Thank you so much for staying tuned in. Well, of course, some Asian markets are closed, but let's take a look at what is really happening with Asia. So you do have South Korea, Hong Kong and mainland China markets that are shut out today, and mainland China, of course, will be closed for the rest of the week as well due to the Golden Week holiday. But it's Japan that is likely to be in focus, because when you take a look at Japan's Nikkei, you're looking at a rebound of 1.7%, about 1.8% currently coming in. Now, of course, the Bank of Japan released its summary of opinions for its September 19 to 20th meeting, which came a day after the US Federal Reserve delivered that 50 basis point bumper rate cut, also before the ruling Liberal Democratic Party election as well last week. Now, Japan, of course, also reported its unemployment rate for August eased to 2.5%, downtick from that 2.7% that we had seen in July as well, and lower than the 2.6% that was also being penciled in. Japan's Nikkei on your screens, 1.7% uptick, 1.8% rather uptick coming in for that one. Let's also take a quick look at Australia's ASX 200 then. Stepped just a tad bit in trade, downtick of about 0.5% coming in for that one, retreating from those all-time high levels that we had seen. So that largely is the kind of handover mix back coming in for the Asian markets that are open today. Now, of course, back home we closed around the 25,810 levels, and currently what is being penciled in is a good start, a positive bias is what we're looking at. So let's really see with that handover how that really pans out for us, Priyanka.
Okay, let's see. At least Nikkei, there's a bounce back. That's a kind of relief. The kind of slump we saw in Nikkei on the political developments out there. Let's see how good or how strong the recovery could be. But then moving on, we've got an action-packed lineup for you for the morning show today. So first come first, 9:30 a.m. you get to hear Manpreet Gill's views from Standard Chartered Bank, especially on the China stimulus, the kind of impact on the metal industry. In fact, the global sectors, what could be the impact? Because China comes up with a good trigger for the global sectors. 9:30 we would have EM equity strategist Adrian Morwood to hear more views from him on the macro front and the Fed comments also. 9:40 we have a mood check from the auto sector ahead of the auto sales numbers now, and of course the kind of discounting which is coming in, the UBS report which quoted. We will have M&M, we will have Vijay Nakara from M&M, and then at 9:50 we celebrate the NPS Divas with ET Now, a special conversation coming in when Nikon speaks to Deepak Mohanty, who's a chairperson for PFRTA.
Alright, then lots of interesting conversations that we're keeping a very close eye on, so stay tuned. But for now, let's also slip into news.
Welcome back. You're watching Market Cafe, and now let's talk about the market participants' much anticipated move, that is the outcome of the SEBI meeting on derivative. Action from the market watchdog SEBI on the derivative space, which was much anticipated, and that's what spooked fear also yesterday, what we saw in Indian markets. Let's put the spotlight on the key announcements that was made yesterday. My colleague Anurag Joshi is standing by with all the key takeaways. Anurag, over to you.
Market regulator Securities and Exchange Board of India concluded its board meeting on Monday with several decisions linked to the capital and financial markets. Some of the key takeaways from SEBI's meeting include the introduction of a new asset class. SEBI unveiled a new investment product under the mutual fund framework, and this new asset class seeks to provide a professionally managed and a well-regulated product, and it seems to cut the spread of the unauthorized investment products that are offering unreasonable and unrealistic returns to investors, and also this would cut the risk that investors face. Now on rights issue, SEBI has proposed a quick issue of rights securities and the flexibility of allotting them to specific investors the rights issues need to be completed in 23 working days. That's versus the average timeline of 317 days. And this is also quicker than the preferential allotment that takes 40 days. SEBI has also unveiled rules on MF Light, which means lighter touch regulations that include relaxed requirement on the eligibility for sponsors and also the promotion of ease of entry and encouraging of new players. And this will help lower the compliance requirements and also boost market liquidity. T+0, that gives the option for investors to trade in the secondary cash market, and the number of scrips that are eligible for trading under T+0 will be increased, and stockbrokers can offer access to the optional T+0 to investors, and institutions operating including the FPIs and MFs can access the T+0 cycle. Significantly for FPIs and ODIs, the ODIs or the erstwhile P notes, the segregated FPI portfolios, to have the same disclosure on par with FPIs, and the monitoring and compliance mechanism for submitting appropriate ODI subscription related information. And there's a proposal to mandate issue of ODIs via a separate dedicated FPI registration.
All right, thanks Anurag for that roundup coming in terms of the SEBI board meet outcome. But we also caught up with Sunil Subramaniam, market expert, on the phone line post the SEBI meet concluded. Let's go across and listen into what he also had to say then.
This should help expand the penetration of mutual funds because, what has happened is that the new asset class that has been brought about is intermediate between PMS and the regular diversified schemes. So many investors, because you have to put 50 lakhs minimum in one scheme in the portfolio management, this will now allow even people who have total 50 lakhs to put 10 lakhs in 5 different schemes. So what this is allowing is people who are willing to take more risk, but they don't have that much money to qualify for an AIF or a PMS, they are doing that. That's a very good thing. In fact, it should help expand the industry. I think all these regulations are favoring mutual funds, and I think SEBI's direction is to make more and more of the F&O traders and the retail equity buyers to use mutual funds as a vehicle to access the equity markets. And I think these are all more steps towards that direction. I would welcome this. What's happening is, in 300 days' time, between the time they launch, the purpose of the rights issue, the end use of the funds, all that could change. And investors who are early in the stage will get a very different experience to those who join later. By keeping the 23-day window, you're making sure that whatever is filed in the prospectus, in terms of the end use of funds, the money can be raised quickly and deployed. So I think that it's very, very critical that linkage between an investor's interest and the actual end use of the funds will be now more protected, and this will help in efficient capital markets to perform well.
All right, looks like there should be a relief that nothing significant or what was spooking fear in markets didn't come from the derivative space, though there were a lot of other announcements. Moving on, now let's talk about the auto sales. A mixed picture could be in store for Motown in the month of September. There is a better rural sentiment which could aid the tractors and the two-wheeler sales, while higher base and discounts can impact PV segment. Now, Srishti joins in to tell us more on what to expect. Srishti, over to you.
Well, if you look at the September auto sales estimate, then this time we are expecting a mixed bag because the retail sales actually got impacted because of the inauspicious period for Hindus specifically, that is called Shraddh Pritipaksh. Apart from that, if we talk about the segments that could be outperformer, then the key to watch will be the two-wheeler as well as the tractor segment, while for passenger vehicle and commercial vehicle, we are not expecting much. But on your screen, you will see the big trends that we are seeing panning out for the two-wheeler segment. It's the rural demand that is expected to be better than the urban segment. Passenger vehicles, the elevated discount levels still persist. Apart from that, what we are seeing is not much growth on a month-on-month basis. The commercial vehicles are expected to see a negative volume impact on a YY basis, while for the tractor division, on the back of the improvement in the farm segment, we are seeing almost a double-digit growth number on a month-on-month basis. Let's quickly take you through the numbers then. From the passenger vehicle segment, it's just Tata Motors passenger vehicle that's expected to show a growth of 8% on a month-on-month basis, while for M&M as well as Maruti Suzuki, there's not much expectations. The numbers on your screen. On the back of that, if we talk about the commercial vehicle vehicle segment, not much improvement is seen in this particular segment versus the expectations were quite higher. You will see that there is a decline on a YOY basis for all the three companies. If we come to the two-wheeler segment, then yes, indeed, the rural sentiment is picking up, and not just that, going ahead in the festive season, the expectations are building up quite well. The dealers are packing up the inventory on the back of those expectations. On a month-on-month basis, we are expecting all these companies to come out with a positive number. The key to watch will be TVS Motors, where we are expecting a 14% jump. Hero MotoCorp too is expected to show a growth of 11% on a month-on-month basis, and there could be a good rebound in Eicher Motors Royal Enfield, and 78,500 is the expectation, while for Bajaj Auto, the number is expected at 4.3 lakhs. And lastly, from the tractor division, like we said, that both the companies are expected to show a more than double the number that was seen back in the last month. And for Escorts, the expectation is of 11,250 units, while for M&M Tractor, 45,950 units is what we are expecting. So kind of a mixed bag, but the key segments will be that we will be watching out for how they perform.
Well, absolutely, Srishi. Looks like it's a mixed bag that is in store, especially after that Shad Pitru Paksh that you said is going to be weighing in just a little bit. But let's also take a look at what the brokerages then had to say, because you do have Morgan Stanley coming out with a note on Tata Motors, and they have an equal weight rating. They're talking about the JLR slowdown as well as the passenger vehicle weakness. That is also something that they're highlighting, along with a weak Q2 guidance as well, based on due to supply chain issues, and that is something that they're also flagging. Now, in terms of the discount uptick, they're also talking about how there's an early indicator of weak demand in terms of what the discount uptick really means and what it stands for. Now, when you take a look at what else Morgan Stanley then had to say, they are talking about SAMIL as well, where they're maintaining an overweight rating. They're talking about production cuts being a key headwind as well, and easing inflation is something that they've highlighted as well. Unlike OEMs, they're also talking about how supplier margins are not something that are cycle high. In terms of the ramp up in non-autos, that is something that they see coming in as a key tailwind as well. So that largely is the handover when it comes to what Morgan Stanley then had to say about Tata Motors as well as SAMIL.
So it looks like some further softness could be anticipated for Tata Motors. That is what Morgan Stanley is also speaking the same thing what UBS also spoke in their report. Okay, moving on. Let's get to another news now. Turning to the insurance sector, there will be tweaks in products and commission structures. Now, Anurag Shah is here with all that you should keep an eye out on. Anurag.
From 1st October, commission structure and product structure is getting changed in life insurance industry. All the products which has component of surrender value, products like endowment product or the ULIP product with the saving component, the structure is getting changed, and the companies are filing new product because now the companies have to give the more surrender value in the initial year after the new norms. So commission structure is also getting changed. So first year commission is getting decreased drastically. And the commission will be linked to the persistency and the duration of the insurance policy. So initially in the older rule, for the first year, if somebody is surrendering the policy, they used to get almost no money back, but under the new rule, they will get around 30 to 35% refund in a form of surrender value. So now the new structure of surrender value is getting implemented, and companies have completely changed their structure, and the commission structure is linked with the persistency. The number of years the policyholder will pay the premium, accordingly only the agents will get the commission. So presently under the older rule, the first year commission used to be very high, but now that commission will reduce drastically and will be linked to the persistency.
All right, thanks Anurag for that roundup coming in. Then moving on to an 80 Now exclusive, some relief might be in store for sugar companies as the government is considering to lift the export ban as well. Sameer is joining in with this exclusive. Sameer, looks like there's a good sweet gain in store for the sugar companies. What is the exclusive news there?
Agriculture Ministry, from the Consumer Affairs Ministry, from the Commerce Ministry, the secretaries, they are meeting up and they will be discussing on the big question that if the relaxation can be given and to what extent, to what quota the relaxation can be given for the sugar export. If you see the larger picture, government is also of a viewpoint that they are in a comfortable position when it comes to the sugar availability for the domestic consumption, for the buffer stock, and also meeting the ethanol blending target. If you see the figures, the industry estimate, ISMA has suggested that for this sugar season 2024-25, the sugar production is likely to be around 33.31 million ton. If you see the buffer stock, that is also there of around 55 LMT, and government understands that they will be able to maintain this buffer stock very comfortably. And from the industry viewpoint, they will be providing roughly around 5 to 5.5 LMT for ethanol blending as well. So from all these three perspectives, government understands that they are in a comfortable position. And industry has also advocated that government can lift the restriction on sugar export to the quantum of around 15 to 20 LMT. So that's the positive development taking place in the sugar sector. In addition to this, government has already indicated that they are looking to revise and raise the ethanol prices. The decision can be taken up in the cabinet very soon, and also government has indicated that they are actively considering to raise the minimum support price for the sugar, and in this direction also some positive or concrete steps will be taken very soon.
All right, so some relief coming in from the for sugar companies. Thanks very much, Samir, for all the details on this piece of news. We stay for a short break here, but then don't go anywhere because we get you all the action in sense of the news that you need to focus on and the brokerage notes. Welcome back. You're watching Market Cafe, and now time to get you the action from the derivative space. Let's understand what was the action from the FI space and how the long-short ratio looks like, the kind of action in terms of strikes on the call and the put side also. Ansh is joining in with all the details from the F&O space. Ansh.
Right, so in previous session, we saw market had actually declined. Let's see what happened in index future. So FIS in index future have covered their long by 23,000 contract. They have covered some shorts as well. So net to net, we are seeing a reduction of 22,000 contract. So here we are seeing that they have actually trimmed their losses on long position. Whereas if we talk about retail's position in index future, then they have actually covered their long by 4,000 contract. Most importantly, they have covered their short by 61,000 contract. So here we are seeing that they are booking their profit on the short position, due to which the total long position is around 36% currently. Let's see what happened in Nifty. If you can pull the chart of Nifty. So Nifty in the previous session has actually given a breakdown from its key support of that 26,000, but next support lies around the 25,800 mark only, because that's a gap which had formed on 23rd September actually. So this is the level where we can see some consolidation if we sustain on opening. Whereas on option front, we are seeing very strong call writing happening at a 26,000 psychological mark, indicating option traders are expecting a strong selling pressure around this level. Now, if we talk about Nifty Bank, the Nifty Bank was actually consolidating within a range, but in the previous session, it has given a breakdown from its range, indicating bearish sentiment in the market. Apart from this, today we have Fin Nifty and Nifty Bank weekly option expiry, so we may see some good volatility in the market. On option front, we are seeing strong call writing happening at 53,500, indicating resistance around this level. So keep an eye on these levels.
Well, absolutely, Ansh. That is something that we're keeping a very close eye on as well. But it's the securities transaction tax as well that is in the spotlight. There are new transaction fee revisions in both the equities as well as the derivative side. So what are you making of that? And what really are the changes in terms of what was it earlier and what is the hike that is coming in?
Right, so in line with SEBI's new directive, stock exchanges have revised their transaction fee, which will be effective from today itself. Now, before discussing that, I'll just say how the calculation is done. For STT, future STT are based on turnover value, whereas option STT is based on a premium turnover value. Now, for NSE, the charges are 297 rupees per crore for cash market, 173 for equity future, 3,503 rupees for equity options, whereas 35 rupees for currency future. Now, if you talk about BSE, then they have revised their fees for Sensex and BankX option to 3,250 rupees, whereas the currency future is 45 rupees as compared to NSE's 35 rupees. Moving on to commodity exchange, MCX has also changed their charges, and here we are seeing that 210 rupees is for futures, whereas 4,180 rupees is for option. Now, this changes align with SEBI's mandate for a uniform flat fee structure.
So uniform flat fee structure is applicable, looks like applicable for all the three commodity exchanges, for equities as well as for commodities. Now, moving on, let's get to the stocks which could be buzzing in trade today on the back of some news. Ria joins in with a list of stocks. Ria, morning.
Yes, good morning. So let's take a look at all the stocks that are going to be in focus today. Now, first up, gold loan companies are going to be in focus since the RBI has observed several irregular practices in the loans against the pledge of gold ornaments and jewelry. Now, they have found shortcomings in the use of third parties for sourcing and appraisal of gold loans, and regulated entities have been undertaking the valuation of gold without the presence of the customer. They've also found inadequate due diligence and lack of end-use monitoring of gold loans, and the RBI has also found weaknesses in the monitoring of loan-to-value ratios of gold loans and incorrect application of risk weights. And because of this, the RBI has now asked regulated entities to comprehensively review policies, processes and practices on gold loans, which is why these companies are going to be in focus today. Let's also shift focus to Tata Steel, which is going to be in focus since the company has said that they are going to be ceasing operations at the Blast Furnace 4 along with other associated iron and steel making assets in Port Talbot, which is the UK's largest steel plant, bringing an end to the iron making at the site. We also have Piramal Pharma in focus since they have announced an $80 million expansion plan for the sterile injectables facility in Lexington, Kentucky. Now, currently the Lexington site can manufacture 104 product batches per year with utilization at peak levels. And upon completion of this expansion in Q1 of 2027, this capacity will increase to over 240 annual batches. We also have Kalpataru projects in focus since they have been awarded new orders of rupees 1,241 crores in the T&D business in India and in the overseas market as well, and also for the residential and commercial building projects in India. And with this, the year-to-date order inflows have now crossed over 11,000 crores. Let's also talk about Tata Power, which is going to be in focus since they have inked an MOU with the Rajasthan government for an investment plan of rupees 1.2 lakh crores in power distribution, transmission and renewables. And this MOU covers the development of renewable energy projects, solar module manufacturing plant and rooftop solar installations as well. We also have Blue Dart Express in focus since they are going to implement a general price increase with effect from the 1st of January 2025, and this average price increase is going to be in the range of 9 to 12% depending on the product variabilities and the shipping profile as well. We also have NTPC Limited in focus since they have signed an MOU with the government of Rajasthan for the development of a 25 gigawatt of renewable energy projects. And lastly, the Bank of Maharashtra is going to be in focus since they have approved a QIP at a floor price of rupees 60.37 per equity share, and the opening of the issue was yesterday on the 30th of September. So definitely keeping an eye out on all of these stocks today.
Well, absolutely, Ria. Thank you so much for getting us that extensive list of stocks that we need to keep on our radar as well on account of news flow. But there's a host of counters that we should keep an eye on account of what the brokerages are saying as well. And Jinay is joining in with just that list. Jinay.
Well, yes, so firstly, let's talk about Aadhar Housing Finance. Investec have initiated a buy rating with a target price of rupees 600. Now, what they believe is that the company is the largest and most diversified housing finance company in India with a dual underwriting model. Also, the diversified origination mix will extends their total addressable market is what Investec believes. Now, there are some supply overhang which will remain to continue as a private equity firm holds about 76.5% stake into the company. They're expecting the AUM and PAT growth to be 21% and 20% respectively over next 3 financial years. Moving on, PB Fintech will be in focus as Jefferies have maintained their buy rating and the target price is rupees 1800. Now, what they believe is that the management recently clarified about planning a one-time investment of up to $100 million US. They believe this clarification addresses a core concern around companies' balance sheet remaining in asset-light model. They see PB Fintech as a preferred play on India insurance growth with the core engine remaining in high growth orbit. Moving on, JP Morgan have come up with a report in oil and gas segment where there are 3 potential top-down catalysts for all the companies. First is retail fuel could hurt stocks in October. Second up is a committee report on unbundling of gas and transportation. And thirdly, sales which are due in November. Now, this will be negative for GAIL and other CGTs. What they say is that they prefer Mahanagar gas. Also, tariff renegotiation is possible. Petronet's gas, the Dahej terminal is possible is what they are saying. Also, they say that one should look Petronet gas adding more strength in March and seasonal strength in import next summer.
All right, thanks very much, Renee. We'll keep an eye on these stocks with the brokerage notes have come in. But now let's shift focus to some consumption stocks. Management meets have happened in few of the consumption space. Now, JP Morgan has come out with notes on the highlights of 4 consumption stocks: Havells, GCPL, Dabur, and Crompton. And Varun is here with all the key takeaways. Varun, of course, ahead of festival season, and of course, did you get any sense of is there a rural uptick from these notes?
Right. For some of the companies, yes, there is a rural uptake, but for some of the companies, the B2B has not been, the B2C has not been good till now, and they are eyeing the festival season. So let me start with Havells, where JP Morgan has a neutral call and 1780 is the price target. Now they say that the B2B demand has been healthy, but the B2C demand has been moderate from Q1 highs, and now they are eyeing on the festival season. Although they are looking at good margins from Lloyd, and over there they are prioritizing the growth. But overall, if you look on the non-Lloyd portfolio, the margins are going to be in mid-teens. For Godrej Consumer, they say that the recent price hike that the company has taken is not adequate actually in the soap business, and the margins could be in the pressure in this quarter. Also, the newly launched project, they are seeing good demand. Other than this, the increment capital allocation would be limited in the region of Africa. Now, when it comes to Dabur, they have a neutral call and 625 is the price target. Now, here they say that the rural uptake is a bit positive. And let me tell you, Dabur is one company which has a good exposure in overall rural market. So, if Dabur is seeing a good uptake in rural market, so that's really a positive sign. Although the near-term growth headwinds is for the juice and also the urban general trade channel. This is what JP Morgan is highlighting. For Crompton Consumer, they have a neutral call and 380 is the price target. They say that the company is targeting doubling their revenues in next 5 years, and the near-term demand trends actually remain subdued for Crompton consumers. They aim to expand into 3+ categories in next 5 years, and they eye around 12% EBITDA margins in the long term. So if you look the overall management, what JP Morgan says is for consumer space, consumer durable space, the demand is a bit subdued, but yes, there is rural uptake at least in the FMCG space for Dabur.
Absolutely. Thanks, Varun, for that update coming in. So those 4 stocks, Havells, GCPL, Dabur as well as Crompton are likely to be in focus. But there's a lot that is on brokerage radar this morning, because Morgan Stanley has also come out with a brokerage note on Kaynes Technologies as well, maintaining an overweight rating when it comes to this particular stock and also hiking the target price. What's really driving the strong core business according to the brokerage house? Then Sharad is standing by with those key takeaways.
Well, yes, a strong core business commentary coming in for Morgan Stanley, and they have maintained overweight, but the target price has increased and there's a significant jump from it. From 38.45, it has jumped to 66.52. Now, interestingly, they have been very bullish on the core business, and that's one of the strong footing, and there are 2 factors for it. The first one being customer acquisitions and the second being a sectoral tailwinds. Also, the capacity building in OSAT and the PCBs, which are your miniature form of works, these are going to drive the value addition going ahead. Now let's look at the numbers. The EPS CAGR, that's almost 53% growth is estimated for the core EMS business, and this is coming in for FY24 to FY27. And also, if you look at the core EMS business revenue, they have estimated that EBITDA is expected to grow between almost revenue and EBITDA, both of them expected to grow more than 50% over the next 3 years. Now, earnings revision, they are driven by strong order book and also increase in the customer addition. So, of course, a bullish tone is coming in from Morgan Stanley when it comes to Kaynes.
Yet another positive note on Kaynes. That's what we should take it. Sharad, thanks very much for that news on this. But then now let's get you some more news from outside the world and outside the business world also. In fact, first get you the updates from the Lebanon. The most significant escalation in the Israel and Hezbollah conflict. The Israeli Defense Forces have started limited ground operations against Hezbollah in southern Lebanon. The ground attacks are backed by airstrikes and even artillery launches in places which are close to Israel's northern border. Now, Japan's PM Fumio Kishida has resigned, with his cabinet paving the way for his successor Shigeru Ishiba to take the office. Ishiba was chosen as the governing LDP's leader last week to replace Kishida, who announced in August his resignation at the end of his 3-year term. Yesterday, Ishiba said he planned to call a parliamentary election on October 27 after he formally is chosen as PM. And External Affairs Minister J. Shankar met with US Commerce Secretary Gina Raimondo, and the meeting focused on sectors such as semiconductor, critical minerals, trusted partnerships and supply chain resiliency. The two leaders also discussed initiatives to strengthen the US-India trade and investment relationships.
Alright, then moving on to news back home, then Jammu and Kashmir heads into the third and final phase of the assembly elections. Voters from 40 assembly constituencies will decide the fate of 415 candidates. This is the first assembly elections in Jammu and Kashmir since Article 370 was abrogated, and the results will be announced on October 8th as well. Moving on, then, PM Modi will address an election meeting in Haryana's Faridabad today, the fourth in the state since the announcement of the poll slated on October 5th. The PM will also seek votes in support of the BJP candidates in all 9 assembly constituencies of the district.
All right, with this, that's a wrap on this edition of Market Cafe. But don't go anywhere. The market action begins and starts with ET now. Stay tuned.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.